Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Wednesday, March 28th, 2012. Let's get right into the charts. There's a lot to cover this morning. First, we're going to start off with the usual S&P 500 E-mini futures. You'll see they are trading up by about 2 points, two and a quarter, right to around that 1408.75 level. So futures are holding steady. They are trading positive this morning. We're going to have to watch the U.S. dollar index. That's going to dictate a lot here. If I switch over to the U.S. dollar index chart, and here's a chart of the dollar, you'll see that the dollar has made a pretty nice little pop. However, it is starting to pull back now. When the dollar pulls back, the futures will catch a bid. If the dollar starts to move higher, the futures, the S&P futures that is, will start to trade down. So the U.S. dollar index is very much in play these days. Trading inverse to the major stock market indexes. Now, markets have held up very, very well, but there's a few things to go over that I think are worth noting. The first thing I want to talk about is Asia last night. And if you go to the Asian markets, and I don't have them on this screen here, but you should see that the Shanghai index finished lower sharply last night by about 2.65%. That's quite a decline in the Shanghai index. Therefore, that tells us you want to watch a lot of these Chinese IPOs. Now, these Chinese ADRs. Yesterday, all the Chinese ADRs held up very, very well, but today you want to watch stocks like Baidu. This is a very, very important name. Stocks like Sina Corp, which had a big day yesterday, that could come back in. China Mobile, ticker symbol CHL, that's another one. China Unicom, CHU, Sohu. All of these stocks could be in play today. If the U.S. markets show any kind of weakness, the Chinese ADRs will be vulnerable to a sell-off. So you want to keep an eye on all the Chinese ADRs as far as I'm concerned. Anytime you get a sell-off the way you did last night in the Shanghai, that's a major decline. Any way you slice it or dice it, that was basically a big, big rollover, and it's already been a weak index. So a lot of people are not really paying much attention to China these days. But that is a big decline in the Shanghai, and I think it's worth paying very much attention to. So we'll watch those Chinese ADRs. If the U.S. markets are weak, these Chinese ADRs are prime to pull back or sell off today. So keep that on your radar this morning. Okay, let's talk about a few other things that are out there. I know there's some economic news out of Europe. I think the UK's economy contracted at a pretty decent pace yesterday, or this morning, I should say, rather, earlier today. So that's something worth noting. If you take a look at the European markets right now, they're really basically flat. I think just the Spanish market is down about, I believe, 0.9%. But the DAX, the CAC 40, and also the FTSE are basically just slightly in negative territory. They're not down all that much. They're waiting for the U.S. markets to open up to see what's going to happen here. So we'll have to watch that closely. Now, there's a ton of liquidity out there being thrown out via the Federal Reserve, the ECB, a lot of bailouts everywhere. So there's a lot of money out there that has to find a home. The question is, has it found it already, and can it find more of it? And that remains to be seen. But either way, the markets are still holding up very, very well so far. We are coming into the end of the quarter. We'll see how much of this is window dressing, how much of this is real stuff. We'll know more as we get towards the latter part of the week. But either way, the markets this morning are still holding up fine, and that's what you have to pay attention to. Price action is really what's most important. Now, a couple of other things to talk about: gold and oil. This morning we are seeing crude down $1.25. Now, there's a report out saying that President Obama, Nicolas Sarkozy, and I believe somebody else, maybe somebody from the UK, they're all going to talk about opening the strategic oil reserves. And if that happens, they're going to try to bring down the price of energy. But that will only last a short amount of time. So just realize if that happens, that's just a Band-Aid on the problem. The real problem is a weaker dollar. The real problem is geopolitical events in the Middle East. And that's really the problem. But so we'll see if that does happen. But there is talk of that, at least at the moment, that it looks like they will think about opening the strategic oil reserve up, and that's going to cause the price of oil to go down. Let's take a look at USO this morning, and you'll see the USO trading at $40.40. Yesterday closed at $40.71, and spot crude, as I said, was down basically a dollar or so. Nothing big here. $1.24, $1.23, right to around the 106.08 level. So, but crude is still very, very strong and holding steady. Now, gold is getting hit today. Gold is down 13 points. I believe gold is trading at 1675 per ounce. So decent little dip on gold. Let's take a look at the GLD this morning. You'll see down to 172.40. So gold is starting to pull back here a little bit, at least today. Now, if the dollar starts to sell off, which it has a tendency to do after the opening bell, if the U.S. dollar index starts to sell off, that will help gold and oil trade higher. So that will put a little bit of a bid underneath gold and oil, and they'll catch a bid if the dollar sells off. So we have to watch that dollar very closely. Not only does it affect the stock market, also affects the leading commodity indexes, especially gold, oil, and very often copper as well. So we'll have to watch that very, very closely going forward. Now, there are a few stocks in the news today. Nothing great. I didn't see, much out there, but we're coming into earnings season soon, so we'll get more action in the morning. But one I'm looking at right today is Family Dollar. Stock had earnings. Looks like it's trading right around the $59 level. Yesterday, it closed at 58 and a quarter after trading up to 59. I'm not sure you want to make too much out of it. Still looks like a lot of resistance to me around the $59 level. It's a very tough play here. So when I see a tough play, I usually tell traders to just leave it alone. Let's take a look at Tyco. Tyco's had some news this morning. I'm not sure if they're selling a unit, they're merging a unit, whatever they're going to do. Stock is trading up to around 55.50, now selling off to around 54.75. It's a decent uptrend. I think the stock has very good resistance around 56 to 57. We'll see if it gets up there. Let's take a look here at PNR. This stock is the one that I believe is merging their unit with Tyco. Stock has had a big move. I would not be a buyer up here. If anything, it's a fade candidate. But check the news first before you do anything, because I just don't know enough about the story, what's going on there. But this stock is overcooked to the upside. But either way, it's a great move. If you own it, I would be taking some profits right here, or at least trailing the stop tightly. It might even be a fade candidate, but I don't know if this is a takeover or what it is. So check the news there. I just don't know. Let's take a look at Zolt. This is Zoltec. This stock is trading up sharply today. This looks like a pretty decent gap. We'll see if it could get above. It really has a ton of resistance, though, in that 11.75 area, all the way up to $12. So just watch for some short-term resistance there. The gap looks pretty decent, though. It looks pretty strong. So that's where it's going to hit resistance, though, as far as I could see. And that's it this morning. There's really not all that much on the docket here as far as stocks to report or any big gap ups or gap downs that are playable intraday. So we'll have to leave it here this morning, and we'll see what the market gives us going forward. There's going to be some economic data due out in about a minute or two, so you'll have durable goods orders out, I believe, in a little while. And you can see the spiders already spiking up, but that could change quickly after the durable good orders. Could spike higher, or it could come back down. We're still about a minute or so away from that. But as far as stocks out there, I'm not really seeing all that many this morning. The market's a little bit on the quiet side. Volume trends this week have been extremely light, and that's something else that favors the upside in the market when the volume is just so light like this. Yesterday, even we only traded about 120 million shares on the spiders, and it's just incredibly light at the moment. All right, looks like durable good orders are about to be released here. They have not been announced yet. You've just seen a lot of whipping up and down, and we'll see what we get right here. They're out. Durable good orders up 2.2%. So durable good orders are up 2.2%. You're starting to see the spiders fade. We'll see if they do come back. A lot of times the first move could be the wrong move. But durable good orders up 2.2%. Ex-transportation durable good orders are up 1.6%. And in January, wow, down 3%. Wow, it's a nice dip in January. So markets are coming in a little bit. Nothing great here, nothing terrible. If the dollar falls, that will support the market as well. And you can see the dollar really is right at the highs of the day. So dollar moving up, market moving lower, and that's what we have to watch for. Right now, spiders are the ES futures are just up a point right now. But nonetheless, they are still in positive territory. Alrighty, everyone, we're going to leave it here. We'll watch this market going forward. But a decent little dip after the durable good orders. I don't think it's all that important. and we'll see how the market plays out once the opening bell rings at 9:30. Have a great trading day, and we will see you all tomorrow. Take care, everybody.